This series is supported by Apollo Global Management, a leading provider of alternative asset management and retirement services solutions. Apollo seeks to provide clients excess return at every point along the risk-reward spectrum and is focused on empowering retirees, building and financing stronger businesses, and driving a more sustainable future.
Be the change you wish to see in the world. One key to leadership and success is to learn how to work through change. And I would just take that one step forward and say it's more than embracing the change to some extent. It's about embodying the change, recognizing that markets evolve, systems evolve. Our view is that markets evolve, and sometimes it's important to take a stand. So whether that's around the lens on power of capital or the rising relevance of emerging markets as a mainstream asset class, or to redefine who's eligible for success, be the change to understand that our generation has come of age and we can create the world we want to live in.
I'm Aoife Devitt, and welcome to the 50 Faces podcast, a podcast committed to revealing the richness and diversity of the world of investment by focusing on its people and their stories. I'm joined today by Asha Mehta, who is Managing Partner and Chief Investment Officer at Global Delta Capital, where she has a thematic focus on emerging and frontier markets as well as sustainability investing. She was previously Lead Portfolio Manager and Director of Responsible Investing at Acadian Asset Management, and prior to that, an investment banker. She has traveled to over 80 countries and lived in 6, and recently released a book, The Power of Capital, an adventure capitalist's journey to a sustainable future. Welcome, Asha. Thanks for joining me today.
Hi, Ethan. I'm so excited to be here. Thanks for hosting me.
Well, let's start with your background. Can you walk us through where you grew up, what you studied, and your path into the world of investing?
Sure. I grew up in somewhat of an idyllic location at an idyllic time. I grew up in an upper middle class family in North Florida. Perhaps what makes my childhood somewhat interesting is that my parents are both refugees. So I grew up hearing their incredible stories of growing up in different parts of the world with different drivers of war and unrest. And I was really mesmerized by those experiences as a child. But I was taught that it was important to solve for stability. And my parents were both medicine. They had found their paths into medicine as a pathway towards stability and economic livelihood. And when I went to college, you asked where I studied, I was pre-med. So I was intending to follow in their footsteps to become a doctor, just like they were. I double majored in my time at Stanford. I did my undergraduate degrees in anthropology with a specialization in medical anthropology, and in particular, a focus on international trends in medical anthropology. And I also studied biological sciences, which was a program offered by the Natural Sciences Department. The turning point for me in my career from this pre-med path into the world of investments was during a summer when I was in college. I went abroad. I was looking to become a doctor, and I received UNICEF funding to do a project to disseminate vaccines within India. I was traveling there alone. I was staying with a homestay family. And shortly after I arrived in India, I learned that my funding for this project had dried up and that there was no project. There was no vaccine dissemination project that summer. And I needed to figure out what I was going to do instead. And here I was alone. I had been to India many times. And in fact, I had traveled alone as a child many times with extended family there. But looking at a brand new state I had never been to before, and somewhat with foreigner's eyes, what hit me was that what these people needed was not so much health as much as wealth. I would visit hospitals and I could see people in tattered clothes and tattered shoes. And it was palpable to me that they needed access to capital, they needed businesses, they needed liquidity. And I had no idea how to participate in this type of trend, but I was really eager to do so. And so I went to the phone book and I looked up bank. I figured this would be the role of a bank. I found the Bankers Institute of Rural Development. I took a rickshaw and a tempo to go to their actual location. I soon learned that they were a microfinance organization. I offered to do a free internship for them that summer, and they asked if I could use a computer. I knew how. And so my responsibility for the summer was to create a database for their loans. And I would type in the loan values and the uses of those loans, and it would say something like $10 for a cow or $25 for a sewing machine. And it was kind of amazing to me to see how these limited amounts of dollars could be put to such practical use. But it really came alive during my first journey into the field. I went with this organization to visit one of the borrowing groups. We went into their Jeep and through forests, down sort of dirt roads, and we kept going. Even where the dirt roads ended, we just kept driving until finally we found a borrowing group that they had, of course, organized deep in one of these villages. It was very palpable to me. There were about 20 women in this borrowing group. Some were old, some were very young, and we would disseminate loans to them. And I couldn't understand the language, but I had a translator who would explain to me that these women were stressed and they were strained and they were thinking about how to grow businesses and they were working out their strategy as a group here. And I could see that this was an organization that was helping these women grow businesses. I felt that I was witnessing firsthand that as we doled out this capital, we were enabling these women to build financial independence, to support their families, and to develop their local economies. And I was hooked. That was my first experience seeing the power of capital with my eyes. And I decided I was going to pursue a career in finance. I got my first job at Goldman Sachs right out of college, did my MBA at Wharton after that. Then I went to the buy side. I spent about 15 years as a researcher and portfolio manager and had a wonderful run being able to bring together all of the various concepts that I just spoke to, the power of capital and emerging markets, and perhaps doing so with a sustainability lens. I ended up stewarding significant sums of emerging market specific capital and launching some pioneering strategies in that space related to frontier markets, small cap markets. I launched the first active institutional emerging markets fossil fuel free fund. So it's been quite an incredible experience.
Wonderful. And I can just now tell why storytelling is in your DNA. That is quite an image you painted there of your first trip to the lending group. So thank you for painting that picture. Maybe moving from there to, you certainly mentioned having had a diverse set of experiences within investment. Would you distill those into any core investment beliefs or how you approach investing? And maybe with the context of Global Delta Capital as a focus.
Yeah, of course. And many of the themes I'll speak to here relate directly out of those early experiences and how they've parlayed into my experience running investment strategies over the last 20 years or so. At Global Delta Capital, we invest at the junction of emerging markets, data science or systematic methods, and what I call new economy themes. And I'll spend a few minutes talking about either. I'll do it hopefully in less than a couple of minutes each. But I'll touch on each of those themes: emerging markets, data science and technology, and new economy themes. So on the globalization theme, our view is that we're recognizing the rise of the rest in a global sense, that despite the fact that the West is turning more protectionist and China's turning perhaps one would say more isolationist, we fundamentally live in a global world today. Has the globe begun to decouple and was there a peak? I think that is indisputable. And of course, we're seeing decoupling right now. For example, Japan is once again the largest holder of US dollar denominated debt. But it's equally indisputable to say that the level of development and intersection across countries around the globe is a sea change from where it was when the WTO, the World Trade Organization, was formed decades ago. That trend toward globalization was inexorable and remains real. Free trade very much continues. While the US didn't participate in TPP was ratified. Free trade, is very much in progress throughout Asia, throughout Africa, throughout the Gulf, and of course, connecting these various regions as well. One theme that we follow quite closely is One Belt, One Road, and we see that intersection or that trend toward globalization still very much real. So that theme around the shifting global dynamics is one element that we're focused on Global Delta. Technology is another one. We see that technology has enabled emerging markets to leap to the present. And in many cases, emerging markets are developing the most leading technology in reshaping new sectors and new business models. From a technology perspective, we see what's occurred in China in terms of their technological prowess as having prompted the trade war. We see cryptocurrency in Nigeria as a fascinating theme. Who would have guessed that Nigeria is one of the leading nations in the development of cryptocurrencies? And similarly, who would have guessed that Nigeria is positioned to be the largest country on earth by population by 2050? So that brings me to another interesting theme within the emerging markets asset class, which is, of course, the rise of the surging middle and consumer class. So I mentioned globalization, I mentioned technology and the vertical integration of technology. But in addition, it sounds corny because I wrote this book, Power of Capital, but the power center of investments, the changing role of shareholders and shareholders' role in global governance, what happens as companies become larger than countries, the view that investments can, we're seeing it in real life today, be used as a weapon of war, thinking of sanctions, for example, in Russia, and hearing about related rumblings as it may pertain to China. So at Global Delta, we do think about how can we use the power of our own capital to fund the ecosystem that we want to live in? How can we use financial means? How can we use our voice as active stewards to leverage the power of the investment capital that we steward?
It's really interesting, some of the points you made. For example, I did not know about that rise of cryptocurrency in Nigeria, but I did know that Nigeria has been involved, as well as Kenya, some leapfrogging of technology, given they may not have had the basic infrastructure, but they've been able to leap to mobile payments, for example, in a lot more widespread a way than other places. So looking at maybe specific opportunities, you've mentioned many of the sources here. Anything that excites you when you look around the world today, maybe specifically one or two that relate to these themes?
Well, across the globe, they're fascinating opportunities. And again, our lens is emerging markets. So from west to east, from Latin America to Asia, they're just incredible themes. I'd say in Latin America, one theme that we're excited about is the rise of fintech and how financial technologies are enabling companies within the region to grow businesses, to fire up entrepreneurship, to propel these countries forward. Brazil in particular stands out as a fascinating country in this respect. The country's central bank has been among the most progressive to liberalize its standards and allow fintechs to play a meaningful role within sort of the broader financial ecosystem. The new energy paradigm is a theme that we're following very closely and has outsized relevance in the context of emerging markets where access to energy has been prohibitive and constraining economies historically. And it's palpable what happens to businesses when they can get access to energy and literally electrify their plants and move their businesses forward. Within Africa, we see that as a particularly exciting theme. And then Asia, it's hard to sort of dismiss the incredible growth that's occurring within Asia. Yes, China is experiencing a slowdown, but many of the countries around the ASEAN region are showing growth that mirrors what China has been able to execute over the past couple of decades. And of course, I'd be remiss to not mention India, which is broadly considered perhaps a darling of emerging market investors today. It's a country that's on the brink of massive economic growth. Hundreds of millions of people who once lived below the poverty line are now entering the middle class. It makes up the third largest economy on earth, which I think is fascinating. Two of the three largest economies are emerging market economies.
So interesting, and a good segue, given our discussion of energy here, into sustainable investing. As you mentioned, the return potential, and I suppose, how do you think about the sustainability thread running through your return-seeking approach?
Yeah. I appreciate the way you're asking the question in the context of returns. One of the reasons why we're so passionate about the opportunity within the emerging markets asset class is we see this asset class as offering us a clear case where sustainability does not suggest concessionary returns, clearly taking a lens toward funding innovative businesses and being broadly aware of drivers of risk is going to be additive as far as portfolio performance. In emerging markets, the need for human capital development is palpable. The recognition that stronger governance structures will lead to outperformance is palpable. The process that we use at Global Delta is systematic in nature. The way we invest on these themes is by using quantitative tools to help identify which companies, for example, on the governance theme, are better positioned and help differentiate the high performers from the low performers. We find that investing on themes like this across the globe, whether it's developed markets or emerging markets, they are predictive. If you invest in well-performing companies from a governance standpoint, they'll outperform. But in emerging markets, they'll outperform by about twice that amount. So using these systematic tools is really a way to extract more signal from our investment toolkit. So in terms of the way we approach these ideas, I'd say there's two aspects to it. One is using, the financial additionality. So using our investment tools as a way to bolster returns, better evaluate companies, identify, not just the financial statement health and sort of the valuation opportunity of a company, but give us a more holistic view on how are the management teams supporting this company? What's the relationship with suppliers and with customers? Given, kind of the basic Porter's five forces, I find that ESG data sets give us the tools to make these types of assessments. So that's one way we use the signals from ESG data sets to help us generate better investment returns. But the other notion around it is that we can leverage the breadth of our coverage, our data sets, our back tests that have shown us how these types of signals can be predictive to returns. We can use these types of insights to collaborate with industry groups and with regulators to help advance more holistic reporting and to ultimately advance practices that we think are aligned not only with human capital development and novel infrastructure, such as related to the new energy complex that we talked about before, but ultimately give investors a better return on the capital they're investing.
We're going to take a short break to hear from the supporter of this series, Apollo Global Management. I sat down with Joe Moran, Managing Director, Institutional RIA Sales at Apollo. I asked him how Apollo was evolving, particularly as it works with clients in the wealth segment.
Apollo is focused on building out a holistic ecosystem dedicated to the wealth channel, not only managing private market assets, but also building differentiated products and structures that are fit for purpose, supporting and delivering educational resources to the marketplace, and providing high quality marketing and servicing for individual investors and their families and advisors.
And now back to the show. You touched on the quant process a little bit by referring to data sets. Obviously, Acadian is known for its quant process, and you've been a portfolio manager there. What would you say is the blend of quantitative versus qualitative fundamental factors in your investment approach?
Our process utilizes systematic tools as a way to create an objective assessment of a company. So I'd say the strategy is systematic in nature in that we are systematically evaluating every company on a multi-factor approach, on a wide consideration of factors to determine its relative returns. It's systematic in that the way we build portfolios is using, a set of tools that help us assess what is the risk profile of a company and how does that translate into the overall portfolio effects. So in terms of the toolkit, I'd say it's strongly systematic. But in terms of how that toolkit is designed and how the portfolio is stewarded, is much more market-driven and based on fundamental insights. Like I said, in the context of sustainability data sets, we're looking to build a set of signals that give us a holistic view of companies. So it's not just what's the valuation and what's the ROE on a given company, but again, what is its relationship with its customers? It gives us better insights on how management is not only managing their financials, but how are they managing their employees and their relationships with the various stakeholders as well. So, signal development, fundamental in nature. And of course, in emerging markets, the greatest source of risk is country risk. And so my strongest belief is that in managing emerging market portfolios, it's important to have a lens to what's happening on the ground and recognizing that not all macro events can be modeled. And so there is a bit of discretion in terms of country effects within our strategy.
And I can't wait to get to your book. But just before that, I'd love to just ask about your fundraising experience because you've recently launched a fund. You're in the middle of fundraising. And it is a time when emerging markets perhaps have had a little bit of a struggle around perception because of I suppose, the underperformance, as well as some, you've mentioned in your book, when countries become uninvestable. We've had a little bit of that occur to the universe. We've definitely had geopolitical flashpoints. Could you talk about your fundraising experience and fund launch experience?
Sure. I think there's no better way to put it than it's been a labor of love. It's been the most intense project I've ever taken on. I have 3 children. I'm catching up perhaps because this organization feels like my 4th and by far the most intense across the various children in my life. Launching this fund and the firm behind it, it's been quite laborious. I heard a statistic recently that when fund managers launch, they need to understand that the time to raise capital is going to be twice as long as they expect, and the investment required to get there is going to be twice as much as what they've anticipated. I'd say that's more or less consistent. It's been challenging to launch the vehicle. And I do believe that this is consistent with the experience of entrepreneurs, even without the considerations that you mentioned previously, the fact that emerging markets has been a tough asset class to invest in over the last, not just the last year, but the last decade. When I set out to build this strategy a couple of years ago, I thought this is the right time. Perhaps we're catching the inflection point in emerging markets. Emerging markets were already trading at a relatively historical low. But in the couple of years since, like you say, the tensions with China have increased. And as I mentioned previously, the unrest between Russia and Ukraine has been a headwind. Having said all this, we've been successful. We've launched the vehicle. I've been inspired by the team that is with me at Global Delta supporting this and inspired by the investors who have the foresight on the asset class to want to take some of this exposure, but are also aligned with this vision around how we can use investment capital, not just to generate active returns, but also, as I've said before, to build the ecosystems in which we want to live.
Some good lessons of wisdom there, I think, around managing expectations and time. I think that is always the one that somehow gets overlooked in the enthusiasm of a new launch. And probably that's the only basis on which you would launch if expectations were a little too short. But good to be reminded, I think, for the people who are fundraising that they're not alone in it taking longer than they thought. I think that's the important point to share here. I'd love to move on to your book because I am a total travel junkie and I devoured Jim Rogers' books. So to see another book come along in a similar vein was just great. And it features so many countries that I've never been to. So really great insights. What prompted you to write The Power of Capital and what kind of a reception has it had?
Oh, I'm so excited to hear your words there. Thank you for those. And I also was an avid reader of Jim Rogers' books, and I was thrilled when he actually endorsed this book as well. What originally prompted me to write the book was simply it was early in the pandemic. I was going through a career change, deciding to launch the fund that we just discussed. And, again, I think at the start of the pandemic, it was a time of reflection for everyone. I started just writing down my stories, taking notes on what the prior, 15 years of fund management had looked like, having had the opportunity to travel across the globe, having experienced so many harrowing events, entering Cambodia with an expired passport and being told I might not ever be able to leave, being in Saudi Arabia and, being under the wrath of the religious police, traveling with my young children at the time, and just by weeks missing the massacre on foreign tourists that occurred within Tunisia. Some of this had just been, so harrowing, like I said, that I needed the catharsis. But as I was writing, Jim Rogers' experiences that he had shared with me in his books decades ago really started to resonate. And looking back, he had truly been an inspiration for me and carving my own career into international finance. It started to occur to me that many of the stories that I had heard around the world, many of the insights I had developed were stories that needed to be told. I felt that there was, sort of an investment theme that investors needed to know. I felt that, if they could see the level of innovation, how technology has transformed China, how Eastern Europe's basis has transformed from being about castles and lakes to more about, novel technologies, that so much of the opportunity that impassions me about this asset class perhaps could demystify what institutional investors perceive when it comes to emerging markets.
And maybe can you give us a couple of examples maybe of some of those maybe misunderstandings or things that are overlooked that you help demystify?
Well, I mentioned a couple. China, of course, is the most complicated country to discuss. It's truly experiencing such great tension with the US that while the incredible advancements that are occurring within China, whether that's the rise of technology, as I mentioned previously, or these notions around the growing middle class. I mean, it's kind of incredible what China has developed over the past couple of decades, literally bringing 500 million people out of poverty. That transformation within China is just so palpable. Young people in China have never known a life of poverty. I think there is this perception here in the West that many of the emerging markets are quite low in their level of development. And before the trade war under President Trump, people would ask me quite commonly, why is China even considered an emerging market? Shouldn't it be considered a developed market? For those who had been aware of the transformation that has occurred there. Arguably, what's occurred within China has been so powerful that is what has driven the geopolitical tensions that we perceive today between US and China. Eastern Europe is another example just mentioned. I think a lot of investors are wary of Eastern Europe, particularly what's happening between Russia and Ukraine. There are pockets of Eastern Europe that are just fascinating in terms of their levels of advancement, the technologies that are coming out of Romania, for example, whether that's, SaaS technologies, automotive technologies, healthcare-based technologies. This is where many countries within sort of the Eurasia region are going to access their technologies. Who would have thought that what's currently considered a frontier market could be a hotbed of such innovation? And the stories go on and on. There are just countless examples. I mentioned India before and the incredible transformation that's occurring there. When I think of India and the change, whether that's, across the removal of cash within the country, the education of girls within the country, the development of climate technologies. What's happening with India doesn't feel like a once-in-a-generation change or a once-in-a-century change. It may be even greater than a once-in-a-millennium change, the level of progress that's occurring there. And many of the countries that I've spoken about, India, Romania, I haven't even touched on the Gulf yet, but the Gulf, some of the advancements that have happened in the Gulf in terms of the liberalization of their markets and the liberalization of some of the kind of very tight cultural standards has really unlocked the country's relevance and return profile. And what that means is that over the last decade, as I said before, and many investors have started to question why emerging markets at all. Look at the incredible return profile of the US. These countries that I'm talking about have actually posted returns that have kept up with the US. So Vietnam, Saudi Arabia, Romania, India, these have posted the same or very similar return profile as the US. It speaks to heterogeneity within the asset class. And again, some of just the incredible growth and transformational stories.
So interesting. And we'll put a link to the book in your show notes. And as I said, we probably could have dedicated a whole series to this book, but chapter by chapter, so many interesting insights, also including that whether markets become uninvestable theme that I mentioned before. I just want to move on then to give a little bit of coverage of this journey, because you do mention in the last chapter, I think, that women are emerging market. And you have, obviously, as a female portfolio manager, you're probably not exactly in a large cohort there. What are your thoughts on how well women are represented in finance and how well has that changed over the course of your career? And maybe also weaving in what you've seen in emerging markets. You mentioned micro lending to women, but what sort of role are women playing in the universe you look at?
Fascinating. Yes, it's a bit of a twist within the book, admittedly. The book walks readers across the globe. It starts in China, goes to Vietnam. We go then to the Middle East to talk about Saudi and sort of weaves its way across the globe. And as I discuss the trends that are occurring within emerging markets, I highlight, as I mentioned earlier in this podcast, how in many contexts, companies within the asset class become larger than the countries themselves. A case example was Mercado Libre, where the wealth within the company is larger than the country in which it's listed, Argentina. And of course, it becomes more and more borderless as it grows because its reach goes well beyond Argentina, throughout Latin America, and even beyond that region. And so it got me thinking that, if we can think of companies or countries in a borderless context, let's redefine how we think of an emerging market. Ultimately, we're looking for untapped opportunity with proven potential, structural hurdles that are being dismantled, and vast potential. And if we look at some of the criteria that one might use to evaluate women, then perhaps it stands out that women are the largest emerging market in the world. What do I think of representation? I think that this is opportunity. I think there's still a long ways to go. And perhaps some of my inspiration came from investing in the emerging markets, where I would often sit with CEOs, CFOs, board members who were women. Again, I think it's probably unintuitive, but there's actually greater representation of women on boards and management teams in many pockets of the emerging markets than there are in the developed markets. So part of that is what inspired me. I mean, where are we on the journey? I think the statistics show that we've still got a long ways to go in terms of equal representation of men and women within this industry. I think this industry is significantly lagging other professions in terms of representation of women. But I'm a quant, and I can admit that statistics often lag reality. And I can say that anecdotally, I'm starting to see change occur. And again, the statistics aren't quite showing it yet, but change does tend to be incremental before we hit broader tipping points. My view is that the first step is representation. And I think that your podcast in particular has done so much to raise awareness around the pool of talented women that are investing and are able to show returns and show investment capabilities that are on par, and perhaps, some literature shows even exceeds that of men. I'll just say, in my own experience launching this vehicle, I've been very pleased to see representation across the value chain of investments, not just within corporates, the companies we're investing in, not just among investment managers, where, again, I believe there is a growth in representation, but even on the allocator side, we're seeing directionally that there are more women sitting in seats there. And so directionally, I've been pleased to see the progress, but of course, we still have a long ways to go.
So well said. And we do focus on and feature a number of female allocators on this podcast, and the future is very bright. I think not only for the current CIOs, but the CIOs in waiting, or the deputies and the senior professionals beneath them. So that is, on the allocator side, I think is looking pretty good. But yes, in the money manager side, probably a little bit of a ways to go. I'd love to move back to some personal reflections. And you feature a lot of some of your heroes in your book. But can you speak about anyone in particular who had an impact on you throughout your life?
We talked about Jim Rogers previously. I think he certainly had one level of influence. Of course, I'd be remiss if I didn't mention my own parents. I mentioned them at the start. My father was raised in extreme poverty. He was born in pre-partition India, what is now known as Pakistan, but raised in India in poverty. And just seeing how he was able to go from a childhood without electricity or running water to, providing the stability that I spoke about earlier on. Having seen his ambition, his grit, the power of the human spirit, those are characteristics that have certainly stayed with me. And of course, my mother as well, who has her own story, as I mentioned previously, became a pediatrician in oncology, so treated children with cancer, and learned to cope with some of the emotions involved with that type of experience by storytelling, by writing, by using literature to process information and to bring objectivity. So, those aspects certainly stay with me. Academically, Jeremy Siegel was a professor I was very close to at Wharton. My experience, like I said, prior to my academic training was with my parents and their stories of these emerging markets. And Jeremy Siegel brought to life for me the idea that there could be economic value associated with the emerging market countries, that these countries will be buyers effectively of U.S. assets. And we're seeing that happen in real time. You mentioned my prior career at Acadian. I spent nearly 15 years with Acadian, and I learned so much from the organization. I remained very close to the founders. I learned so much about how to build a firm, how to build a culture, the power of entrepreneurs, and the focus on clients and alpha generation. And just one other individual that came to mind as I was thinking through this question that you shared with me in advance One of the pivotal points in me deciding to launch an independent vehicle was, in a friendship that developed with former U.S. Treasurer Rosie Rios. She was U.S. Treasurer under President Obama. Prior to this period of extreme inflation, she had signed more U.S. dollars than any other treasurer in history. So there's a good chance that you've got her signature on some of the dollar bills that might be in your wallet. But she once told me a story that really resonated around how she was San Francisco based, but when she was working for the government in DC and would often take walks somewhat lonely and reflectively, and kind of hit her as she was taking these walks in the nation's capital that there were so many statues, but these statues were predominantly of men. And she did a study and found that across 12 major cities in the US, there are actually only less than half a dozen that were of actual living women. Typically, when she saw statues of women, they were fantasy creatures or fictional, like Mother Goose, or even the fierce girl on Wall Street. Kind of putting all these pieces together around entrepreneurship, around emerging markets, and kind of taking this vision from Rosie Rios around the need for more representation within the industry. I'd say those are, many of sort of the sources of inspiration that sent me on my current path.
This is why I love these podcasts, because every answer just sends me off in so many different directions. And just picking up on that, what you said about your mother using storytelling as a way to, I suppose, to cope with some of the intense emotional toll of her work is so interesting, because journaling has been known as a way of self-therapy for years, but I suppose we don't always appreciate that sometimes professional writing can help you crystallize your thoughts, clarify, sort. And I'm sure your book was therapeutic in a way, besides being, I'm sure, a lot of work to just get those thoughts together is very satisfying. And that story about representation, my own alma mater put 4 busts of women, female scholars in the Long Library at Trinity College Dublin. And they were the first female bust to appear since that library's inception. So to think that decades and hundreds of years of students looked at only male figures is just hard to comprehend. So really interesting that those stats have emerged. And that's exactly why we need to keep doing this work. Fascinating insights. And tied to that, these key people and some of the wisdom that you've been absorbing, was there any key piece of advice that has stuck with you, or any creed or motto that you live by?
It falls right out of that discussion. I would say, be the change. Be the change you wish to see in the world. I always associated that quote with Gloria Steinem, but it actually comes from Mahatma Gandhi. I've heard many people on your podcast talk about the importance of embracing change, that change is everlasting, change is always coming. And one sort of key to leadership and success is to learn how to work through change. And I would just take that one step forward and say it's more than embracing the change. To some extent, it's about embodying the change, recognizing that markets evolve, systems evolve. I think about this day to day in my own work when we're advancing theses that may go out of fashion or may not be broadly understood. Our view is that markets evolve, and sometimes it's important to take a stand. So whether that's around the lens on power of capital, or the rising relevance of emerging markets as a mainstream asset class, or even as we've been talking about in the context of diversity, to redefine who's eligible for success, what does success look like, just to be the change, to understand that our generation has come of age and we can create the world we want to live in.
Powerful words there, for sure. And my last question is whether you've any advice for your younger self.
My advice for my younger self would be to journal more. I did do a little bit. As we talked about, I was inspired by my mom to keep a journal. I didn't do it as much as she had urged me to do, but the little scraps I had did enable me to pull together this book, Power of Capital. But really, as you just said, to understand that life is an adventure, and by journaling, by writing, you can capture some of these very special moments on the journey. Your own podcast shows that everyone has a fascinating story. So I'd really encourage my younger self to write more, to write, whether that's in the old-fashioned diary or bullet points on the iPhone before bed. I got value out of the trip notes that I had written up for work purposes. But the more that that's documented, it enables my younger self to forget less, to understand how special each stage of development is. The opportunity, as you said previously, to reflect, to find patterns, to sort of objectify situations and work through them. And quite honestly, Ethan, I wish I had more quotes for that book. And I would encourage others who are listening and thinking about the power of journaling. Who knows, you may just write a book as well.
Well, this has been a wonderful discussion. And I think part of that focus on change is about embracing uncertainty as well. And I think because there is inevitable with change, with adventure, and I think finding the courage to deal with uncertainty, I think can allow us to take more risk and ultimately enjoy that return. So this has been, as I expected, a sweeping discussion that has captured so much. And thank you so much, Asha, for being a voice of adventure in the industry, for focusing on not only the investing side, but the sustainability journey, and for sharing your insights here with us.
Thank you so much.
I'm Aoife Devitt. Thank you for listening to the 50 Faces podcast. If you liked what you heard and would like to tune in to hear more inspiring investors and their personal journeys, please subscribe on Apple Podcasts or wherever you get your podcasts.
This podcast is for informational purposes only and should not be construed as investment advice, and all views are personal and should not be attributed to the organisations and affiliations of the host or any guest.